That's right. If you're watching this show, you got to feel like Ricky Bobby right now. All right, let's bring those Osaic chief market. Let's bring their chief market strategist, Phil Blancato. All right, Phil, let's start with the high stakes meeting. Yeah. Beijing. In Beijing, you got China's got their wish list, America's got their wish list. I want you to kind of help check off, what do you think will be accomplished out of all these things that both sides are bringing to the table?
This button here is very difficult to accomplish. This doesn't get accomplished until that gets accomplished, because they're intertwined. We all know what the ambitions are for China there and what it means for us, specifically Taiwan Semi. But unfortunately, Iran has given them an out to been a pause there. Tariff relief has been non-existent. That really hasn't been an issue. That hasn't really had that much of an impact. This is the big one. Technology.
Right.
Will we allow our tech to be sold there? And then there's a side one. What if we allow Chinese electric vehicles in the United States, which is at our price point of significantly lower than where we are in the United States today? I think this one actually is also hard to determine. We want to be a player in that space. We have to be a player in that space.
In the meantime, though, it would help if we can get a little bit of critical materials.
Exactly.
It's not a one-for-one trade-off. We wouldn't trade off this for that, though, would we?
This is the biggest thing. This is the biggest accomplishment. Ideally, the president, who's now under real pressure with Iran, I think you could see that the idea of this constant negativity around inflation, today's number, are indicative of it. But remember, we care more about quarter. We do headline, in fairness.
Right.
But the reality is there's got to be a resolution soon, and he needs their help.
We'll get some purchase orders. We always do. The question is, will they actually follow through? Exactly. I want to pick up on the consumer, the PPI number, obviously casting a shadow there. I did think it's interesting. Now, this is just Bank of America, their credit card spending, both with and without gasoline, gone through the roof. People are still spending. This is something you always bring up. The question is, how much longer can they keep up this kind of pace?
Folks who make over $250,000 a year use 1,000 gallons a year in gasoline. Folks who make under 100,000 use 400. You got a big tax break, right, on both sides. So that's got us to this point. It's why spending is held up. Beyond that, we know still to this day, if you look at it on an annualized basis, inflation is still lower than wages. So right now we're fine. Don't forget, the stock market's at all-time highs. People have made a lot of money. So right now we're fine. Effect. The issue, exactly. The issue is, and by the way, the labor market, in my opinion, is still very good. It's no higher, no fire, but weekly claims are still low. The key here is, can we get oil back down to $85 a barrel, $80 a barrel to show some relief, and it's a non-event. But what breaks your thesis? What are the speed bumps you mentioned about earlier? Oil at 120 or 130 because the conflict kicks on again. Then there's a very different narrative.
Cash pile. We haven't talked about this a lot, but it was assumed that this would start coming down, right? When we were at $7 trillion, people were saying there's a lot of money on the sidelines. Now we're at $8 trillion. I mean, you would anticipate some of this money eventually finds its way into the stock market.
For one of two reasons. If the front end of the yield curve, the Fed cuts rates, you're not earning as much at your local bank, you'll see $2-3 trillion come to the market. On the other side of resolution to the war, you'll see some more coming to the market. You'll see this idea of, hey, the war's over, let's go spend, it'll be a boost. But be careful. The war kicks on again, the number goes higher.
Well, I mean, it's amazing to me that it's hit $8 trillion. Talk about making some money.
3% on it. You're 3.5%. Yeah, it's not a bad yield.
It's not a bad yield, but I mean, the market, I mean, anyway.
Yeah, you're right. You're right.
Let's talk about where you like to see opportunities in coming. You like ExxonMobil here. You know, for some of the obvious reasons, productivity, production growth, dividend has always been phenomenal. They're an aristocrat. Their earnings are growing. But here, I want to pose this to you. I want to bring up the chart, though. Oh, this is, I mean, it feels like this is ominous because oil was what, 115 or something like that, and all of a sudden, even though oil is held up, the stock, it's not just ExxonMobil, but all of these stocks are going down. If they're going down when oil is up, what happens when oil comes down?
These guys are going to be at the critical kind of tip of the spear. They're going to go up to bringing out 2.5 million barrels a day in a couple of years' time. They're building an ammonia plant and a hydrogen plant that's low carbon plant, the biggest in the world. And they recycle millions of gallons of plastics a year. So you have a company that I think is changing its stripes. And here's the reality. We're going to go through a cycle. We're going to need to restock all this oil that didn't go around for the last 6 months. I think it's actually a really nice opportunity to benefit on the restocking once a world.
So use this weakness here then to take advantage.
Exactly.
Okay,
but I think it's a long-term play because of their dividend.
Morgan Stanley, there's a lot of financials out there. You picked this one for a variety of reasons, attractive valuation being one of them. Beautiful chart, right? Just broke out through a double top. It's forming a bottom. So where do you think it goes from here?
You got what I love about this company, Their PE ratio is one of the cheapest in the financial services.
Right.
They got a 19% earnings growth rate, but they do something no one else does, or less do better. They're in the wealth management space, which is just cash reserve, reoccurring money. If you want to play on the K-shaped economy, the world's wealth, the United States wealth, they do it better than anybody else. This company's got a really, and it's a safe haven play as interest rates get cut, because they're not just investment banking. That's the key.
Got less than a minute to go, but I got to get ASML in there because I was scared last year. A story came out that China hired a lot of folks from the Netherlands that they had laid off, and they recreated this product, which is they're supposed to be 10 years away from it. Yep. Now, the good news is that apparently it's not that good and no one will buy it. So we've got a company that's 100% monopoly. The stock, though, for the most part, have been going sideways. Maybe it was those concerns. It is breaking out now. A monopoly in semiconductors, this stock's got to go much higher.
We talk about picks and shovels of AI.
Right.
40% earnings growth this year. 40% margins. Almost 50% earnings growth. 30% margins next year. What I like about it, they make the stuff that makes the semiconductors.
Right.
And I don't care what China does. We need more semiconductors than ever, whether it's satellites in space or data centers in space, or all the other stuff that's going in this euphoria around the plumbing of AI. They're at the middle of it, and they got great earnings. Buy the company because you got a better deal on it, and forget about it.
Yeah, great stuff, my man.
Thank you, buddy.
Always great seeing you.